Welcome back for another look at the charts. Today we'll be looking at four instruments. First is EURUSD, second is GBPUSD, third is AUDUSD, and fourth is US30Cash, which is Dow Jones. EURUSD for our chart. According to many analysts, the euro has been supported by the fiscal stimulus deal reached by the European Union leaders on Tuesday. The package is not only helpful for the economies in need, but also indicates unity among group members. EURUSD has performed 4 consecutive daily sessions moving higher, and at the moment seems to have stabilized at the higher levels. The first level we have noted in case the currency pair continues to move higher is the R1 116.20 resistance level, which was last seen in October 2018. That's 2 years back. Even higher, we have noted the R2 116.80 level and the R3 117.50 resistance barrier. In the opposite direction, and if a selling trend occurs, then the S1 115.45 support level could be retested, while the S2 115 and the S3 114.50 support levels are also imminent. The RSI indicator below our chart is currently running on the 70 level, implying the upward momentum could be ongoing. Moving now to GBPUSD. In the past days, we had an optimistic outlook by BOE's chief economist Andy Haldane. He referred to unemployment as not being at favorable levels, but better than initially forecasted. And he also confirmed they are considering negative interest rates. BOE Silvana Tenreiro also confirmed economic recovery has prevailed and business operations have increased. GBPUSD had a bumpy ride for the past 2 days, as on the 21st of July it had moved upwards to breach our R1 127.40 resistance level and even test our R2 127.70 line, but did not breach it. In the following day, the currency pair moved downwards, breached the pre-mentioned levels, and also breached our S1 127 and our S2 126.70 support levels. At the moment, the pair is trading just between our R1 127.40 resistance level and our S1 127 support level in a sideways motion. In case of an aggressive price movement for the currency pair, we are left with 2 levels. First, the R3 128.15 resistance level that was tested for the last time on the 10th of June and could be a target in a strong bullish run. And in the opposite direction, the S3 126.25 last seen on the 20th of July and could be engaged in a continuous selling momentum. Moving now to AUDUSD for our chart. Now, a report by Reuters claims Australia could be near to see its biggest budget deficit since World War II. Although Australia was among the countries that dealt with the pandemic well, it is now forced to bring out billions of dollars in stimulus, and the negative impact could be seen on its GDP. Yet things may not be as bad as they are forecasted to be. In any case, AUDUSD has seen a dramatic rise that has been going on since the 20th of March, while in the past days the rise has been steeper. At the moment, the currency pair is trading just above our S1 0.7130 support level and seems to have stabilized nearby. However, if traders are interested to buy the AUD, then we could see the pair moving toward the R1 0.7205 level. And if the bullish momentum is strong enough, then the Aussie could be seen climbing to the R2 0.7250 line, while even higher we have also noted the R3 0.7295 resistance barrier as a possible stop point. In case of a retracement, we have noted the S1 0.7130 support level, and below it are the S2 0.7075 support barrier and the S3 0.7020 hurdle that had been passed as the currency pair moved upward on the 21st of July. Please note the S3 0.7020 hurdle was also tested twice on the 15th of July and could prove a strong level if approached. Moving now to Dow Jones. This is the US30Cash 4-hour chart. Now, according to various sources, the major stock markets in the US, namely the S&P 500, the Dow Jones, and the Nasdaq, have benefited from the news of an upcoming relief package by the US government. A more complete idea could be that the fiscal stimulus packages are making the USD cheaper, which possibly makes stocks a more favorable investment for the long term. From our perspective, Dow Jones Industrial Average is in a continuous upward momentum since the 15th of June. As the index has broken above the S1 26740 support level, the road could be set for the R1 27605 resistance level to become a target. Please note the R1 level was last seen on the 9th of June, while even higher we have noted the R2 28585 level that was seen for the last time on the 24th of February when the pandemic was kicking in. That eventually led to the market's steep drop. The highest level we have noted is the R3 29464, which was also an all-time high price reached in February 2020. However, if the index comes under selling interest, we have noted the S1 26740 level, lower the S2 26005 line, and even lower the S3 24958 resistance hurdle as possible stops. Please note the upward momentum could be supported by the weakening USD. In any case, a change in the course of the greenback could impact the index's direction. Now, we hope you found something useful in this report, and from all of us here at IronFX, best wishes and solid trading.